The rate of inflation is still very high. Consumer prices increased by 6.6% from a year ago, the fastest rate increase in 4 decades, excluding volatile food and energy prices. Overall, inflation did slightly decline, primarily as a result of cheaper gas. However, rising costs for food, healthcare, and housing have indicated that price pressures are spreading throughout the economy. The investing world is buzzing with ideas for the best ways to manage inflation. Investing in commodities, treasury inflation-protected securities, real estate, and commodities is a common investment strategy. Stocks can also provide long-term protection since they typically appreciate faster than inflation. But Warren Buffett witnessed firsthand in the late 70s and early 80s that inflation is a danger, and he saw the long-term effects of it on consumer purchasing power, investments, savings, and business expenses. Given the sharp increase in prices, it is important to review some of Buffett's best recommendations for battling what he once described as a gigantic corporate tapeworm. Here are tips on financial advice and investing in inflationary environments that you absolutely need to know. The best investment in these inflationary times, according to Buffett, is anything that will develop you, he said during Berkshire Hathaway's 2022 annual shareholder meeting. He also said, whatever abilities you have can't be taken away from you. They can't actually be inflated away from you. This is not the first time Buffett has described skill development as an inflationary strategy. Back in 2009, he said that investing in oneself and one's skill set is the best way to guard against inflation. If you're the best teacher, if you're the best surgeon, if you're the best lawyer, you will get your share of the national economy pie regardless of what the currency may be. Buffett was implying that while money is subject to inflation, personal skills are not. If one has a skill set that is in demand, it will remain in demand regardless of the value of the dollar. He also claims that the second best protection is a wonderful business, which refers to a business where the products are in high demand even if the company has to raise prices. The chairman and CEO of Berkshire Hathaway stated at a 2015 shareholder meeting that you should steer clear of any business with heavy capital investment, and that the best businesses to buy during inflation are those that you purchase just once and don't need to make additional capital investments on in the future. He emphasizes real estate as a good investment during inflation because it can be purchased once and gains value over time, while he criticizes utilities and railroads as poor choices. Buffett is a big supporter of index funds, which are an investment package that replicates a specific market index like the S&P 500. In May 2022, he stated, "In my view, for the majority of people, owning the S&P 500 index fund is the best thing to do." When compared to actively managed funds, low-cost index funds typically have lower fees and let you purchase a diversified portion of a market or sector. Practically speaking, it spreads out the risk of your investments, which is extremely important in times of volatility. Buying individual stocks to actively manage a financial portfolio, or stock picking on the other hand, can be costly, time-consuming, and risky. On April 30th, when questioned about stock selection, Buffett responded, "We, Buffett and Charlie Munger, Berkshire Hathaway vice chairman, haven't the faintest idea what the stock market is going to do when it opens on Monday. We never have." He continued, "I don't think we've ever made a decision where one of us has either said or been thinking we should buy or sell based on what the market's going to do, or for that matter, on what the economy is going to do. We don't know." Value investing is another effective strategy recommended by Buffett. Value investing entails purchasing top-notch stocks, ideally at a discount, and keeping them for a long time. According to Buffett's advice to Forbes magazine in 1974, buy into a company because you want to own it, not because you want the stock to go up. One method for selecting where and when to invest is to evaluate a company's value. Buffett's done well for himself by adopting this approach. For instance, he disclosed that Berkshire Hathaway had bought 15 million shares of a gaming company named Activision Blizzard at this year's annual conference. The purchase is one of the more recent investments of Buffett's strategy, which involves choosing undervalued investments at a favorable price, rather than stocks with high growth potential. Buffett claims that the worst thing you can hold during an inflationary period is a currency whose value has been inflated away by an excess supply of it. The loss of purchasing power is bad for savings, bonds, and low or no interest money market accounts. This is probably the reason why Buffett invests money that has been sitting on the sidelines in times of inflation. Not being prepared for inflation can end up being the most expensive expense over the long run, so you definitely have to think about how it affects your investments and your quality of life. You can also check out our other videos on our channel and subscribe if you're interested in learning more about how to be prepared. See you next time.